Alrighty, guys, welcome to today's free event with Magnetic Trading / Investments. So as promised on the headline, today we're going to be going over the dividend trade. I'm going to talk to you a little bit about that one and why we use it within our blueprint program. We're going to update you on Bitcoin. Some of you have already got Bitcoin. Some of you are still on the sidelines. So we'll give you really an overview of what's going on there. And I'm also going to go over the trading strategy, which I'm using this week on the FTSE, which you can choose to follow if you wish. So most of you know myself and Cameron, but for those of you who don't, I'll just do a very quick 30-second synopsis. So we're a licensed company in Australia. We founded Magnetic Trading over a decade ago. I focus predominantly on the UK market. Cameron's on Australia, US, and German markets. We predominantly focus on index markets to make our money. Although from an investment side of point of view, we're looking at the whole spectrum. But from short-term trading, it's really just the indexes that we're looking at. Why index markets? For me, they're easier to predict. I like the fact that we can trade at a set time each day. They're liquid, they're diversified, and we can perform a lot of market function as well, which a lot of people don't use. They're more focused on traditional approaches like technical analysis and fundamental analysis and price action, which all has its place in the markets, but so many people struggle with trading, short-term trading. If those approaches were so good, then why is everyone, the majority, struggling to make money from short-term trading? So we use short-term trade. We use market function for our big trades, our blueprint trades. There's 9 of those big high probability trades. One of them actually is the dividend trade. We'll be talking about that very, very shortly. But yeah, I mean, these sort of trades are linked to what's going on behind the markets. It's linked to buy and sell orders, which is why markets exist in the first place. It's not really to do with technical or fundamental analysis. So it's a very different approach to making money. And we certainly make more money trading less here at Magnetic Trading. We're not opening trades every day. But if there's a certain pattern or something going on behind the scenes, then we definitely will be taking advantage of that. So some examples of market function: first trend of a month, dividend day. I'm going to talk to you about seasonal buying. Some of you may know there are certain times of the year where you should be buying and selling, and sometimes you should just be on the sidelines. And then events like expiry. Most of you have got that cracking expiry trade, which happens every month. 80+% win rate over 7 years on that one. So we've been trading it for many, many years now with our clients, and it's a really nice lifestyle trade to get your teeth into. All right, so what I'm going to do is I was going to start to you about Bitcoin, but what I'm going to do is I'm going to actually just cover the FTSE first, because I just want to go over what we've been doing this week and the approach. So let me change my screen, and we'll just see what's going on with FTSE. So this is, let's just go on to a daily chart. So on the daily chart, you'll see I've got blue lines here. These are key levels in the market, which give me a very good idea of where I should be selling or buying. So at the moment, we are selling. So let me just check. No, I usually start the webinar off with can you hear me? But I'm sure you guys would have been posting in if you couldn't hear me. But maybe one of you could just confirm you can hear me. I'm sure you can. Yeah, okay, great. I forgot to do that. So these levels, so 76.80 was a key level. You'll see that's on my chart up at this level. What I do is I usually start looking at levels from weekly down to daily, then I take the 1 hour chart and then I work down to a 15 and then I'll work on a 5 or a 1 minute for entry. But I don't really do any analysis on a 5 or a 1 minute chart. It's really just to enter into the market. So at the moment, the FTSE's been testing this 7680, and really we've been selling this for about, I think we've been selling for about 5 days now, 5 trading sessions. We've just been using 7680 as a reason to sell the market. And what we do here at Magnetic Trading is we don't use a conventional stop. So many teaching practices out there on the internet, they'll talk about placing a stop, maybe 2 points above a level, or a break of a bar or whatever. We like to do things very differently, do things against the herd. So what I'll do is, if I'm looking at a stop, I'll usually be using acceptance, or I will add, say, 10 points on to where I think I should put the stop, because where I think to put the stop is an intuitive response, and it means that everyone else will be putting their stop there, which means the market makers will often drive the market up or down, put those stops, and then the market will go the same way that you expected it to do. Most people churn themselves in the market because they're just putting their stops in the wrong positions. So add some points onto your stop if you're putting them in very predictable places on the charts. And also I use acceptance. So what is acceptance? Well, acceptance is a full, I use 5 minute bar or 1 minute bar, 1 minute bar in the first 30 minutes, 5 minute bar after the first 30 minutes of action. And that's starting, that's FTSE starting at 8 o'clock in the morning. So 8:30, I'll start using a 5 minute bar or the chart, and I'll use a 1 minute chart in the first 30 minutes. So what we're looking at is we're waiting for a full 5 minute bar or 1 minute bar to close above the level. So we just take 7680. Let's just have a look at this. I've actually changed my stop from this today. I'll tell you what I'm using at the moment. Again, it's a very different type of stop. But let's just have a look at acceptance. So here's an example of acceptance. So you can see here on the chart that 7680, the market, what it's doing is it keeps hitting this level and rejecting. We actually call this minus development in the markets. It's when the market it cannot get enough volume to break through. So it puts you back into a range market. Range markets are very boring, but you can make easy money in them, which I'll show you in a second. But the novice trader will probably be putting his stop above the highs here or above the 7680. And he's just getting clipped out non-stop. Acceptance is really a full 5 minute bar, closing body and wick above the level in question. The key level on my chart, I've had this line on my chart for months now, it's at 7680. I'm not going to get into where I get that level. It's part of our blueprint program, but the point is about the stop. So you'll see acceptance has not been seen. We have not seen a full 5 minute bar close, body and wick, and a subsequent break of that bar for this entire period. If we move on, again, we get some rejections here, nothing. This isn't hit. This is actually an acceptance bar here, but it never breaks. So the full body is very much above 7680. For this to be acceptance, it needs to break by 2 points. So again, another false break above here, and down it goes. And really then we've just kind of stayed below 7680. So yesterday, on Friday, I told my clients, look, keep selling these rallies at 7680, whilst we avoid acceptance above 7680. Yesterday I did the same thing, and you can see this is turning into quite a lucrative trading strategy, because how many times has the market rallied and sold off back down to around 7600? I'm actually targeting 7560, so about 100 points lower than where we are at the moment. This is a cash chart, so the FTSE closed at 7612, but we're actually we're trading a lot higher than that at the moment, because we've had some strong German data that came out, and the FTSE has rallied. but I'm expecting it all to come off again. So today on my report, I'm just telling people to sell the rallies above 76.60. The stop today is going to be a little bit different. It's going to be 30% ATR above 76.80. 30% ATR today, guys, I'll give you the number. It's 20 points. So it actually lands at 7,700. It's not ideal, that actually. I'll probably actually recommend you use acceptance above 7,700. The reason being is that even if we did get above 7,700, I don't think it's sustainable. Historically, FTSE doesn't do well in February or March, actually. February is generally a flat month, doesn't do anything. Does anyone know when the bumper month is for FTSE? You can take a note of this. It's worth knowing. When do you think one of the best performing months is for the FTSE? Maybe type it into the box. When do you think the bumper month is? Good. Andrew's got it right. It certainly is. It's April, yeah. So that's what we'll be doing. Mark, remember this presentation is magnetic trading. It's not magnetic investments. So just a side note there, although we are talking about some Bitcoin today, this is short-term trading. Remember, magnetic investments is not short-term trading. So we don't do these types of trades in magnetic investments. So for a short-term trade, as I said, sell the rallies. Some sort of acceptance above 7,700 is needed. My target is 75.60, and eventually I think we'll see that. As I said, February is usually a very quiet month, and I'm expecting us to stay fairly range bound in the markets, and I think we will drift low. So the narrative I put on my trading report today is to sell above 7660. It's stop acceptance above 7700 and targeting 7560. So that's really a synopsis of what I'm doing on the FTSE at the moment. Keep selling those rallies until we do see a breakout above 7700, which again I'm not expecting, but if we do, that's when you have to cut and come out of the trade. And while you're doing that, you could continue to do this. And it's just not today. Really, I've really got this analysis for the entire month until we get down to 75.60 or we get the proper breakout above 7,700. So that's what I'm looking at. Now, from an investment point of view, Mark, I may well get into the FTSE. If we do get a big correction coming up, then I may well get something in there. But it's at the moment, we're by no means anywhere near any investment levels for longer term trades. This is just short term range bound action, which we're going to be taking advantage of. So does anyone have any questions on the FTSE then? In terms of what I was talking about there, the analysis, where I see it going, the stops that we're using different stops to the herd. And again, a boring market can still be profitable. Everyone is focused on big trending markets and big moves in the market. Actually, generally, I miss the big moves in the market. And if I miss it, I don't get involved, because actually that's the days where the retail market get wiped out and they lose all their money, because they probably be making a lot of easy money, and then they won't use a stop and they'll let things run and they'll start betting against the trend. They won't accept that the trend has changed or we're out of a range bound market, and they lose everything, maybe 1, 2, 3, 4 months of hard work. That's the way it goes. So we'll see what the FTSE does later on in this webinar. I'll come back to it. But for now, let's go back to a different screen and talk a little bit about Bitcoin and what's going on with Bitcoin. So last year, we got all our members into Bitcoin, and we even went out publicly and said, look, you guys have got to buy Bitcoin. And we gave a whole list of reasons. The first one was the Bitcoin ETF. That's now happened. There was a big buy into that one towards, well, really it started second half of last year, and it's peaked out in January. I'll get into what's happened to Bitcoin now, where I see it going. So that's done. Major banks have now started to advise on Bitcoin. We had the Bitcoin halving in 2024. Generally, the market after that is bullish. It happens every 4 years. And then other things to think about of Bitcoin is mining is going to cease in 2040. So no more mining can happen there. And the max capacity of Bitcoin is 21 million coins. That's the really sweet thing I like about Bitcoin, is the fact you've got this supply demand issue. So what's happened at the moment is Bitcoin's trading around 43,000, 42,500, I think it is 42,500. It's drifting around that level. So what's happened is the market, everyone was expecting the market to just propel upwards once the ETFs were announced. And we actually went out to our members towards the end of last year. It was in December, our investment members, and we said, look, guys, this is getting a little bit too easy, a little bit too predictable. The reason being is everyone was bullish on Bitcoin, and we just thought, yeah, it could go to the moon, but it's a little bit obvious. So we then started to warn our members about the sell the news scenario, which has happened. We burst up to around 49,000 on Bitcoin, and then we sold off to I think the low was 38,600 or something like that. And now we've moved back up again. So that was really just some profit taking. There was some traders that had been positioning just on the buy the news, buy the rumor, sell the news. So that all happened. We also had a lot of rotation from money from some of the existing Bitcoin funds. So at the top here, you'll see we've got Grayscale Bitcoin Trust. This has actually been around for a very, very long time. All these lot below it have not. But this one was not an ETF. It was a different vehicle where people could get exposure to Bitcoin in a non-regulated environment. And it traded at a premium, and sometimes it traded at a discount. In the later years, it was, since really COVID, it's been trading at a significant discount. So it definitely had its flaws. And then we had all the lawsuits about Grayscale wanting to turn into an ETF, and it was rejected by the SEC. So Grayscale sued the SEC, and so on and so forth. But as we know, it's now being converted to an ETF. Now, the downside of Grayscale is in previous years, it charged a whopping 5%. So people have been in Grayscale fund and they've been charged 5% for many, many years. And that's a high premium to be paying every year, but they didn't really have much choice. Now all these other Bitcoin ETFs are available. Some of them are offering 0% fees for the first 6 months, but they're around they're about I think around 0.30 to 0.50 basis points. So they're pretty cheap compared to 5%. Grayscale have reduced their fee down to 1.5% per annum, but it's still way above everyone else. So what we've seen is the market cap of Grayscale was around 25 billion. and now it's around 20 billion. So what we've seen is we've seen a lot of outflows come out of Grayscale because of the large fees. And that has impacted the overall money going into these ETFs. So even though price has not moved, hasn't gone to the moon, actually this is very, very positive. 1.6 billion has gone into, net inflows have gone into these new Bitcoin ETFs, and it's only just the start. We can see though that it's, you know, the numbers are not have been reduced because, you know, Grayscale, we've had 6 billion, almost 6 billion come out of that one, again because of these high fees. People don't want to be into that fund anymore. Now you're probably thinking, well, why is there still 20 billion in there? Any thoughts as to why there's still 20 billion? I mean, it's still a sizable number. Why do you think there's still 20 billion left in there? Why would they not just come out? Anyone? It's actually tax. So it's tax, guys. People don't want to realize a huge amount of tax gains as a result of, because, you know, some of these guys, a lot of investors have been in Grayscale for multi years. So they're sitting on huge amounts of gains. So for them, it doesn't really, they're happy to just continue paying 1.5%. And that's what Grayscale is betting on. They're betting on the big chunk of people holding their money, you know, hodlers, rather than short-term traders, are just going to stay in this. And yeah, they're pretty much right. You know, 20 billion is going to stay, and they'll get away with charging 1.5%. Still a meaningful business model. So that's kind of what's going on behind the scenes. This source is Bloomberg. Yeah, I mean, what I want to add though, this is all very, very positive. This is very positive data, and you know, I would actually be worried if the price of Bitcoin was just going skyrocketing to the moon. The fact that it's doing this is good, because it's going to shake out people that have no patience. It's going to shake out the short-term holders. It's going to shake out the crew of, you know, want to get rich really quick people. They're just going to see the price fairly stagnant and think, well, that's it. Bitcoin's done its thing, and they'll sell out. The weak hands will get out. But let's go into really what's going on behind the scenes as well. So at the moment, the ETFs have been approved. The next stage now is all these advisors of the financial companies, they need to learn how to sell Bitcoin to their clients. They're going to have to do this. It's going to take a bit of time. There's going to have to be board meetings within fund managements, and directors of boards of financial firms. They're all going to have to talk about this. Sorry, I just got an alert. Something's happened. Let's see. Oh, we've just spiked above 76.80, guys. So this is a good area to start looking to sell FTSE. Get a bit of a reversal signal, but I like this area up here, 76.80. Again, it's going to be acceptance above 700 as a stop, but that's a nice open on FTSE. All right, back to the Bitcoin. So yeah, they're going to have to learn about this. So it's going to take some time. The interesting thing about what they're selling though is it's going to be a very lucrative financial instrument for them to sell, because the gains of Bitcoin, we're still in the infancy of Bitcoin. ETFs, if you look at gold ETFs and, you know, ETFs in the past, if these advisors start selling it now, as the capital grows, their their 1% fee or whatever they're charging will be on the amount money they put into the fund, and they'll continue to collect on that. So they'll get that compounding fee effect from the intense growth from Bitcoin. Baby boomers, they hold all their money in America. They still need convincing. Yes, we've got this ETF that has come out, but they're still in the camp of they don't understand it. They need their SunTrust financial expert to get on the phone and explain why they should get into Bitcoin. So that all has to happen, and that's going to take a bit of time as well. Also, some other things to remember as well. There was a lot of seed money that went into the ETF. Seed money is basically putting BlackRock were buying up, or these other ETFs were buying up Bitcoin, and they're just distributing the Bitcoin that they bought up initially to people that are buying in. But they'll eventually have to start buying more Bitcoin, and that will propel the price up. So lots of stuff going on behind the scenes. I think it's all, nothing changes my mind at all. I think this is all very normal, financial goings on, and I think we should all be still very bullish on Bitcoin. It's in its infancy, and yeah, don't get emotional just because price is not skyrocketing to the moon. These are all the things that are going on behind the scenes that you need to be aware of. So what we'll probably see over the coming months is we'll start seeing a steady increase in price. I don't think we're going to get massive sort of moon boy talk in these, these huge 10% up days. I think it will be a gradual move up this year as the word gets out there, as financial managers start talking to their clients. And what I'm expecting is, over time, I'm expecting a 1% allocation to go into Bitcoin of a portfolio. That doesn't sound a lot, but it's a hell of a lot of money. If you take all the assets in America, for example, it would actually boost Bitcoin to millions and millions dollars per coin. So that's going to happen over time, but a 1% allocation is nothing in terms of the grand scheme if it's adopted into a mainstream portfolio. So exciting times, guys. Exciting times. Does anyone have any questions before I go on to the next topic, which was dividends? Anyone got any questions? Are you expecting a fast increase? Generally, historically, Robert, price Bitcoin will go bullish after the halving event. There can be a bit of a dip, but yeah, then it starts to accelerate after the halving in April. So yeah, I think it could be the back end of the year that things start to really happen. Mark's asking, do you think Bitcoin can be replaced by government digital currency, therefore limited supply? Well, the whole point of government digital currency is it's not limited supply. Digital, I mean, it's the same as fiat currency, but it's in a different format. So instead of having the dollar in a physical note or whatever, it's going to be in a digital format, but it's still fiat currency. Bitcoin is totally different, and it's not. I don't view it as a currency as such. I view it as a wealth storage. I view it as digital gold with a supply demand problem, whereas anything from the government's not going to have a limited supply. They'll just be able to print it as much as they want. Do we have any BTC short-term trading strategies? We are going to launch that this year at some point. But yes, we have some orders in for some of our clients in our investment programs of where to buy Bitcoin. But in terms of swing trading, yes, we do feel that we'll be able to start that at some point this year, because things have settled down a little bit. Right. Next topic, FTSE dividends. So every week, the FTSE will potentially declare a dividend. Now, the FTSE has 100 companies within it. It's an index. These are the best companies, and those companies have shareholders, and those shareholders are rewarded as valued investors. So they will get dividend payouts. When there are underlying stocks that pay out on the FTSE 100, if you have bought the FTSE 100 index, then you will also be rewarded. Okay, so you'll also be rewarded if you've bought the FTSE 100. So what we find is that there'll be days where the FTSE will have a fairly high dividend, and we'll see that the index will rally, and we will take advantage at certain points in the day, and we'll just buy. We rarely sell on a dividend day. So we'll see on the 15th of February, this will change this data, but at the moment we can see a 9-point dividend. So this means that if you bought the FTSE, you would get paid those 9 points of dividend into your trading account. It's actually a net effect because the market will also drop as you've been paid the dividend, because the dividend's coming out of the stock value. But we still find that investors will buy up the FTSE when there is a big dividend. Usually I'm looking for a dividend of over 10. I do believe that this number here will be far greater than 9 on the 15th. So we'll see. And then I actually believe there's going to be a big one towards the end. I think this one as well on the 22nd will be a big one as well. And I think there's some other big ones in March as well. So we're going into dividend season where there's some big companies that will pay out dividends to its shareholders. And every Wednesday, what we do here at Magnetic Trading is we find out if there's a big dividend, and we will look for trading strategies which focus on buying the index only. We don't sell the index on a big dividend day. So that's kind of what we're going to be doing on the FTSE next week, and really throughout February, if the dividends are over 9 points. If you're on our free Telegram channel, often I'll put what the dividend value is anyway, so you can kind of log on there and just see if there's a dividend of 10 points or over. But it's 10 points or over that I look at. I don't look at anything under 10 really. This one's 9, so it's not good enough, but 10 or above is really the sweet spot. And there are a few system trades which we have for our blueprint as well, but a lot of this is quite discretional. So I'll be looking at optimal times of when to sell the FTSE. So that is coming up, guys. So if you're on a Telegram channel, a free Telegram channel, make sure you keep an eye out on the action. It's going to be important. Any questions on dividend, guys? Any questions on dividend? So these are FTSE 100 companies. Yeah, Mark. So if there's a trade that we do for the dividend, we'll just give us a straight buy stop target recommendation. And we'll give you a heads up if the dividend's over 10 on that particular day, so you're aware that you may well get an instruction. But yeah, we definitely want to be taking advantage of big dividend days. All right, any further questions, guys? Any further questions on Bitcoin or the markets? Let me know. Yeah, Mark, we have two models here at Magnetic Trading. We have Blueprint, which is short-term trading, and we have Magnetic Investments, which is not short-term trading. So yeah, so for short-term trading, we have the function trades as well. Some other questions coming through. Let me just check. I haven't missed anything. Yes, dividend is Wednesdays, yes. So it's not today. This week there won't be a big dividend. It's really towards the middle and back end of February when it will start to come off. Yes, there is a recording of this. So Gunnar's one of our clients. He's saying that 15th of February is now 13 points. All right, so you can let me just check actually on that one, Gunnar. Let me refresh. It is, yeah. So there you go. It's updated. So let me just yeah. So actually now, guys, we are looking at 13 points. So there'll be 100%. There's going to be a dividend trade on the 15th. Sorry, it's going to be the 14th. Sorry. So they go ex divvy the next day, but the dividend is on the Wednesday. So it'll be, yeah, next week, the 14th of February, there'll be a dividend of over 13 points. So that'll be a day where we want to be buying the FTSE 100. So yeah, if you're on our programs, we'll manage the whole thing for you. But again, it's just an example of, we're not basing the trade on anything really but market function, but we will use basic price action to get in at the optimal time, and we'll have an appropriate stop, and we'll come out at the best time. So hopefully that covers your question, Heather. Glenn's saying, how do I read FTSE at the moment? As I said, for me, it's still range bound. I think this is a flush up. I don't think this is going to sustain itself, and I think we'll start to retrace again. I think this is just a stop hunt. It's taken out all stops above last week's highs, and yeah, I think this is just all going to retrace again. That's why we used a different stop today. I didn't want to use 5-minute bar acceptance above 76.80 because I knew it might do this. It might clip stops above last week's highs and then fall off again. So nothing's really changed on my analysis. And for me, this is a selling opportunity. Based on seasonality, are you waiting on buying opportunities in March, April? Well, seasonality is still going on. Actually, we're still in a good season for buying. It's just we had some epic buying that came in October, which actually we positioned on. We got our investments into the market in October. For this year, we need to be a bit more patient. We know when we want to get in. It's not at the moment. We're not going to chase the market. Even though it looks good, we'll be patient. Let's go back to the FTSE so we can see FTSE. Let me show you on a 1 hour chart what it's done. It's just, this is delayed actually, this feed, but it's actually higher than this. But what it's done is it's taken out the stops from last week, and it's just at the top of the range. So again, I'm not expecting a breakout here, guys. Still think we need to have a nice acceptance stop above 7,700. But yeah, as I said, this is delayed. FTSE is actually trading around 76.89, so it's kind of taking stops out as we speak in the market. There could well be, but I'm not expecting that to hit today, Richard. All right, guys. Well, it's been a pleasure talking to you. I hopefully you found that useful. And yeah, the other thing I would also say is that sometimes the brokers can inflate their numbers higher than the actual cash market. So I was actually just looking at this price in action thinking it was delayed, but actually I actually don't think that the cash market has got as high as some of the brokers. So the brokers again will be taking some stops out, which sometimes they do. Alrighty, guys, it is recorded, and yeah, I will get the recording out to you. It's been a pleasure talking to you. We will see you at another free event in the near future. And yeah, for many of you, we'll manage that dividend trade for you next Wednesday.